Here's the truth that might make you uncomfortable. Most of the financial advice you're giving to your clients is probably they're making their problems worse, not better, or they flat don't understand it. Now, it's not that you don't know what you're doing. Um, you do. And that's part of the challenge. It's because you are thinking like an accountant and you need to think about cash. When a client asks, why am I running out of money? And you respond by diving into statistics about profit margins or the revenue recognition policy or immediately identifying expenses to cut, that's talking to them like an accountant. You're answering a cash question with answers from accounting reports, and accounting and cash are two completely different languages. Cash is what pays the bills, and your client cannot pay employees or vendors or rent with revenue recognition or by deferring expenses based on depreciation schedules. They need an actual dollars in the bank. And the moment you introduce depreciation schedules or accruals or deferrals or any other accounting jargon, you've lost the clarity your struggling clients desperately need. So stay with me until the end of this episode because I'm going to give you one specific action item that you can implement this week to help your client understand their cash position better and become a more confident cash flow advisor. I'm David Safir. I'm the founder of Cash is Clear Learning Systems, and this is Cash Flow Confidence Live, where financial professionals like you learn to become fearless cash flow and profit advisors. Today, we're digging into and diving into the fundamental shift that separates accountants from strategic cash flow advisors, and that is think cash, not accounting. Let me share with you 10 principles of that will fundamentally change how you approach your client conversations. Principle number one that will change your client conversation is cash is what pays the bills. Yes, I know it seems obvious, it seems stupid. I'm not talking down to you, but I see advisors, accountants miss this constantly, and it's barely touched on in school. Your clients cannot make payroll with GAAP principles. They need the money in the account on Friday. Well, actually on Thursday or Wednesday, depending on when the payroll's pulled, period. Principle number two, accounting is a representation. Cash is reality. GAAP accounting represents financial performance using complex rules and assumptions. How do I know they're complex? Because it takes years to learn what they are and how to apply them. Cash flow. Well, that one, the history shows actually what happened to the money that moved in or moved out and when it did. And your cash flow projection will be based on what you really think will happen, not what will happen in theory, not when the bill is due, but when you think the client will pay. That's an example right there. You project the clients, if you're doing an accounting and they've got a 30-day receivable, and you push it out and say, okay, 30 days from now. But cash, you say, when are the clients actually making the deposits? When does it hit the bank account? You recognize the fact that it's actually taking 45 days. And then you can project more accurately from when the time the invoice goes out until when the time that the cash hits the bank account. One's theory, the other one's the truth. Principle number three, profitable companies can still go bankrupt. Everybody needs to recognize this. Everybody needs to hear it. A company can show a profit on the income statement while running out of cash. I've seen it dozens of times. And statistically, most small businesses that shut down due to cash shortages are profitable when they shut down. It's cash that's the true measure of whether survive or not. And it's not just this week, but the month, the quarter, the year. That's what's going to keep them in business. Number 4, to talk in a language that your clients will understand. Cash timing is everything. Accounting matches revenue and expenses to periods, regardless of when money actually clears. And we can have adjustments from one year to the next or 1 month to the next. There's all sorts of discretion. Yes, there are rules, but within the rules, you can make decisions, and that's fine for financial reporting. But it's useless for helping a business owner who needs to know if they can make Tuesday's vendor payment. It's the timing. When is the money in the bank? Principle number 5, simple math works for cash. Everyone can subtract beginning balance from ending balance. The moment you introduce depreciation schedules or accruals or deferrals, you've added so much complexity that it confuses rather than clarifies the situation. Principle number 6, cash creates immediate action steps. When somebody understands they'll be tens of thousands of dollars short next Tuesday, they know exactly what problem they need to solve and how big the problem is. Accounting metrics don't create the same sense of urgency or clarity. Your AR is $20,000 doesn't tell anybody what to do on Monday morning. Now, you might have coached them, but maybe not. Let me give you a client example of when cash creates immediate action steps. I have a client, I'm still working with him. When he came to me, I didn't know if I could help. We started with the cash flow model. That's all we decided to do to see if I could help or not. We had the discussion. This was on a Saturday morning. We had about an hour and a half, 2-hour long discussion, just going through the model and helping him understand about timing when money comes in and when it goes out. We met again the next Saturday to see if he wanted to continue working with me. And he had this, wow, you wouldn't believe what happened. We actually had one of our best weeks in a long time. And it's because we understood what we needed to do to get clients to pay us now, that day or the next day. And we've lined up everything. So we were putting the jobs out the door and getting paid as quickly as possible. That's all it took. No strategies, nothing fancy, just looking at the model, and you understand the model. Number 7, to how to speak clearly to clients about cash flow. Remember that your clients are confused enough already. The business owners that are in trouble with cash issues are already feeling overwhelmed. They're probably scared and they probably don't know who to turn to. And that's why they're talking to you. So adding accounting complexity when what they need to understand is their cash problem only makes it harder for them to make decisions. So we need to get in front of the jargon, stop hiding behind it, and speak in plain language. Number 8, we're getting to the end. Stick with me, another 3 minutes. Cash is measurable right now. You can check the balance today. You don't need to wait for month-end close or reconciliations or journal entries to know if there's enough money to operate. This is real-time visibility, and that is what a struggling business needs. Number 9, accounting rules change, cash doesn't. The biggest example is tax laws change constantly, state, local, federal. If you're in the United States, wherever you are in the world, I'm guessing it's the same. And even GAAP standards evolve. But the concept of, do I and will I have enough money in the bank to grow, to make payroll, to pay bonuses, to hire a new person, whatever it is, it's consistent, it's constant, and it is universally understood. Build an advisory practice on what's permanent. Yes, you need the background in accounting, but it will change. Permanency is an investment today as far out into the future as long as we have money. And I don't care what form it comes in, if it's cash you're holding in your hand, or if it's numbers in a bank account or cryptocurrency, it's the same thing. How much will be there? Number 10, solutions to cash flow challenges require cash thinking. The strategies that improve cash flow, like accelerating collections or managing inventory or timing payables or impacting margins, they're all masked when you look at it through an accounting lens and you focus on matching principles or inventory valuation methodologies or period allocation. It all starts to get fuzzy. So that's another reason you cannot solve a cash problem with an accounting mindset. There you go. Number 1, 2 to 10. But now, what does it mean for you and your practice? The next time a client asks why they're running out of money, resist the urge to pull up their P&L or start explaining accrual accounting or their balance sheet. Instead, let them know that the only way to really understand is to build a cash flow model. And then you can map it out of the bank statements. When does the money come in? When does it go out? What are the patterns? What are the cash peaks and valleys? And why do they happen? Why all of a sudden do you have a lot of cash followed by not very much? And you look at it and you learn it and you explain it in plain language and you build trust and you become indispensable because you're speaking their language, the language of cash. So here's your action item for this week. Pick one client. That's it. One client who's experiencing cash flow challenges. And they might not have told you, but every accountant and good bookkeeper I've ever worked with, when I ask them, do they have any clients with cash problems? They say, yeah, I think this one does. Well, why? Because you see signs, low bank balances, ballooning debt. This is not going to explain it, but think about, if you don't know for a fact, think about your gut feeling about your clients who's having a challenge. And then schedule a 30-minute call with them. Don't bring the financial statements. Just pull up 3 months of bank statements, and then you can walk through the cash together, that balance each day, and talk about the fact that they got close and down low, and then ask them, what surprised you? Is there anything that you're surprised about? And the conversation will teach you more about advisory work than any technical accounting course ever could. Now, if you want to go deeper into cash flow strategies that your clients control and that have lasting long-term benefits, download my free guide. It's Boost the Bottom Line, 24 powerful cash flow strategies you control, your client controls, and it is a practical, implementable strategies, step by step, that create results. And you'll find a link in the show notes or just go to www.cic.60.com. And by the way, if you're ready to master cash flow advisory and you want to get a jump start, join us at Pivot. It's an unconventional cash flow conference. It's a boot camp for 4 days. We'll be doing 16 weeks of training that I normally do during my masterminds into 4 compressed days. And it's at a luxury resort. Why at a luxury resort? Because you need to be in the right mindset to grow, and you're going to have good food, and you're going to be with other sharp individuals. That's pivot.com. Look at the show notes if you're interested, or it's scrolling across the bottom of the screen. Now, don't go away. One more thing. Remember, your clients don't need more complexity. They need cash clarity. When you shift from thinking like an accountant to thinking like a cash flow advisor, you transform from a necessary expense to an indispensable strategic advisor. Remember that. And until next time, be the confident cash flow advisor your clients need.